Now, the venue and the focus for IAB Interact may change every year, but we have one consistent point. We have the man who has his finger on the pulse of the digital economy. That person is Dr. Daniel Knapp, who is the Chief Economist of the IAB Europe. He is going to come up in a minute and unveil the much-anticipated advertising investment stats for the year. In his keynote, he will unveil the 2024 AdEx Benchmark Report, the definitive guide to digital advertising investment in Europe. He'll walk us through the numbers, the trends, and the macroeconomic forces shaping the ad industry across 28 markets to provide a clear picture of what's next for us. As a reminder, last year in Milan, whilst presenting the 2023 report, Daniel predicted a 10.1% growth for 2024. Have we achieved this double-digit growth? Well, the wait is finally over. Please welcome Dr. Daniel Knapp.
Thank you, Joanna. Very good morning. Good to see you. And you already mentioned how important it is in these turbulent times to have a reliable guide. The AdEx report has been built since 2007 in collaboration with all the other IABs. You'd mentioned 28, I have a surprise today, to come together and to understand how our industry is evolving. Regulatory uncertainty, new formats, the rise of AI, changing dynamics between players, the entry of retail media, all these are things that need to be documented and measured empirically, and that's what we're here for today. So before we start, I want to thank all the IABs who actually submitted data, who collaborated with this report, because it is a joint effort. We all come together to really put the puzzle pieces together and understand how is our digital advertising market performing. You may, for a moment, think that you are in the wrong room today. And I thought the same when I looked at the numbers yesterday. But rest assured you're not, but brace yourself, and I'm glad you, Joanna, you did the fun stuff, for a little Foreign Exchange 101 seminar. We cannot do without it, unfortunately. The good news first. We have expanded our coverage. We're now looking at 30 markets. We actually had 29 before, but for the first time now we've added Portugal. We've modeled Portugal. Portugal wasn't able to submit data, but we felt this glaring white spot on the left of the European continent was just too big, so we wanted to fill it. We've also done additional transformations to the data. And just as a reminder, you can see it here. It's a survey from the national IABs. That's where we start, as the source of truth. And we know we need to adjust methodology, 28 market, 30 different ways of doing things. So we adjust different rates, gross, net, etc., so that we have a like-for-like comparison. And then we also venture out and we look at public filings and other third-party research to see, are the trends that IABs are seeing reflected in the wider world? Are there some adjustments, reasonable adjustments that we need to make? And then lastly, we do some final modeling. This year, we've done one big new thing, which is the full inclusion of retail media in the data. Previously, not every IAB was adding this. Sometimes it was in display, sometimes in search. We've now done this consistently, so we have a full view on this. So on top of a new country being added, you'll also see this addition of completely new category expand the market size that we had previously. So without further ado, let's dive into the market. The digital advertising market in Europe in 2024 was worth 118.9 billion. So we have eclipsed the 100 billion mark, not only by addition of new formats and a new market, but also organically, as the growth rate has been quite dynamic. 10.1%, I said last year, actually the market accelerated more than that. We can see last year 11% and an acceleration of growth to 16%. 16% gives us those 118.9 billion. But you can see underneath the 16%, a separate figure, excluding Turkey. That's going to be very important in the rest of this presentation. So without it, it would be 12.5%. If we leave aside the big digital bonanza of 2021, when we all thought we were in the SVOD, Zoom, and perpetual streaming economy, this was the strongest growth in digital ad spend since 2011, which is remarkable given the uncertain economic climate, fairly anemic GDP growth in Europe in 2024, and also the fact that digital advertising now is about 2/3 of overall paid media ad spend. But did this growth really happen, or is there something more to it? Well, this year it isn't this clear. It's more about interpretations than about facts. So we really have to be very cautious today through which perspective we look at the market. And there are different ways of doing it. Why is it about interpretations? Because the macro headwinds that we saw have massively increased the complexity of doing this study. You can see some of the headlines behind me here. Turkey hit by almost 70% inflation. We can see this is consumer price inflation. We can see massive currency fluctuations as well, and also an up and down on the economic forecast as well. Which means there isn't just this one truth. There isn't just this one 16%. There are alternative truths available. And there's a huge impact of currency and inflation on how the market in Europe has actually performed. If we want to get to the bottom of this growth, was this real growth or just reported growth? How healthy are the bones of our industry really? We need to deconstruct this a little. So bear with me as I walk you through this. A different view would be to say 14.6%. This would be the growth if we just converted every data that the national IRBs provide us with into euros, into 2023 data into 2023 euros, 2024 data into 2024 euros, sorted. This way we would have a real view on how much the aggregated European market would be worth in euro terms today. But this is not necessarily good to understand how much did markets grow locally, because we are adding the foreign exchange effects into the market growth. So a different view, and this is the 16%, is we're doing this in constant currency. So we're locking in a fixed currency, a fixed euro rate, that allows us to carry over the real growth rates that the national market saw. And we are an international group here, so we want to reflect and ensure that we have the dynamics in every market, from Poland over Germany to Spain, etc., reflected, which is why historically we've always used current exchange rates, constant exchange rates. There would be a different view as well, and that would be how much would the market have grown if there weren't any currency fluctuations, and also if inflation would have remained constant. If we do that, the market would have grown by 10%. So whether I was close to the mark or off the mark depends on which truth we want to pick, and I'll let you be the judge of that. We're not done with foreign exchange. We must understand how large the contribution of foreign exchange to the market was. And we can do this by building a bridge. Behind me, you see something called a foreign exchange bridge. We have in 2023, on the left side of the slide, the market, how much it was in 2023. And then we look at how much organic growth was there and how much was actually coming through foreign exchange effects if we convert it into 2024 euros. So 16 billion organic growth, but a foreign exchange drag of 1.4 billion, meaning that around 9% of the entire growth that we saw in 2024, 9% of this 16% were actually not real growth, but coming from foreign exchange. And we can see the impact is unevenly distributed. So here we looked at all the markets that are not in euros and what the impact would be. So you can see in Turkey, 28% of the growth that we're seeing is actually not real, but comes from foreign exchange effects. And that would, if we put it into 2024 euros, would put a drag on the market, a realistic drag on the market size of 2.4 billion. The UK, on the contrary, the exchange rates for pound euro have eased, would have added to the market. And this plus and minus makes around a 1.4 billion drag. But it makes things problematic because this will skew all the growth rates we see in the report. So I've done lots of annotations, lots of footnotes, and provided alternative views for you to really understand whether real growth occurred or not. So our choice is to stick with the constant exchange rate. This is typically done by economic forecasters and also by ad forecasters, so we're in good company here. Now, let's close that chapter and look at the market. And indeed, in the last few years, we did see not constant growth, but a roller coaster of growth. But what's happening now is we're seeing the end of the roller coaster. If we take the annual data that we get and put it in quarters, we can see the ups and downs. We can see the last quarter before the pandemic hits, crisis budgeting, short-termism, the digital bonanza or utopia I just mentioned is clearly visible here. Suddenly, digital endemics collapsed, money wasn't cheap anymore, war was on the horizon, the market went again into wait-and-see mode. Bit of a limbo quarters here, and then suddenly marketers realized they must continue to spend even in adverse economic conditions. And we saw at the tail end of 2023, lots of investment in brand advertising, large advertisers were coming back. It looks like this up and down is over with. The roller coaster is on the final destination. There is hardly any variation in the quarterly growth in aggregate that we could observe in the market in 2024. And the growth was stronger, right? You can see actually the 2023 pattern being carried forward into 2024, although the economy was actually weakening. And this really demonstrates that we have new advertisers coming in, we have a stronger focus on outcomes and performance, but also continued brand building investments, which all contributed to fuel this growth. Overall, this means that around 2/3 of all ad spend in Europe is now digital, 67.2% to be exact. Important to note here that the digital extension activities of traditional media owners, they are all subsumed in digital here. Right? So this would just be, for instance, linear television advertising revenues or classic newsprint revenues in the gray bit. Caveat, we're not including digital out of home in our study here. We're looking at doing that, but just because a screen has an LED, it does not necessarily mean it can be purchased by digital means. So we need to look at the subset of programmatic digital out of home, something that we're working on that will increase the market size even more. In the last few years, digital has seen an outperformance versus traditional ad spend. And we can see this on this chart here, which I update every year. We're asking here on the y-axis, by how many percentage points did digital advertising grow faster than the rest of the advertising market? And then on the x-axis, we can see the share of digital and also the year. Of course, this, as this carried forward, outperformance was slowing down. We saw a little jump during the digital utopia. But fundamentally and crucially, if we look at it today, we saw that versus 2023, the outperformance increased slightly again. This is due to a number of factors, which I already mentioned. New digital-first advertisers coming in, focus on branding, and also marketers very strongly looking at outcomes. If you look at the earnings calls, a transcript of CEOs and CFOs, when they speak about marketing, it's always about how does marketing affect top or bottom line business growth. This is something that we see reflected in this trend here. Let's look across the Atlantic. We have some guests from the US here as well. Europe is around 50% of the US market, exhibiting, including Turkey, similar growth patterns. Without it, again, 12.5%. So we can see we're going to bang on 50% of that. And we are adding just about half of new ad spend every year as the US, 16.4 billion new digital ad spend added in 2024. Now we've got this out of the way, let's look at the countries. Let's look at the 30 countries and what the dynamics in those countries were. Despite having 30 countries, the European market is very top-heavy. We can see the top 3 markets generate about 60% of all the revenue that we allocate to the total market in the ad spend report. If we move to the top 5, it's 70%, and then the top 15 do 95%. So you see a huge, in a sense, mid and particularly long tail of markets, which also means that I've been in extremely close contacts with our German and our UK colleagues, because small changes in those markets would tip the entire growth, of course. But 21 out of 30 markets, not just the big ones, grew double digit. So there was a healthy growth available everywhere across the board, and even if we adjust for foreign exchange. And despite the market being so top-heavy, it is in particular some of the mid-sized and smaller markets which have expanded significantly. If you look at the gray highlighted bit here, you can see the top 10 growth markets. 8 of the 10 fastest growing markets are not in the top 10 markets in terms of revenue, meaning there is strong dynamics elsewhere in Europe as well, not just in the big hotspot markets. But is all this growth again real, is the question. If we do price adjustments, so adjust this for consumer price inflation in the markets, we can see the picture changes dramatically, right? You can really see the impact that Turkey has on everything. Suddenly it drops down, it's not even the fastest growing market anymore. Inflation was actually negative in Romania, so the market actually jumped further up. So if we want to look at the real underlying growth adjusted for inflation and currency fluctuations, this is something we should look at, and this would be the view here. Let's put those markets in context. How big are they, how dynamic are they, and how mature are they? There's nothing better than our trusted bubble chart to illustrate this. We have ad spend per capita adjusted for purchasing power parity on the x-axis, and then here growth on the y-axis. The bubble is the size of the market. And we can clearly see the dotted lines here, which are the European average lines. Again, I put in a gray line here for excluding Turkey, 12.5%. So you can clearly see which market is above and which one is below average. These bubbles make for some really good clustering. And I think we can see some patterns emerge. First off, if you look here in yellow, we have mature markets. Markets that have grown significantly in the past, that have a very high ad spend per capita and are now underperforming European growth. They are digital first, often have a very strong, long-standing digital infrastructure, and are also very wealthy consumer markets. Then we have the heavyweights catching up. We had, for a couple of years, in particular France and Germany, lagging the overall European growth. These markets weren't growing as much as they should be given their potential, given how much money can still move from traditional media, and also given their addressable market in terms of consumers available. This is changing now, and for the last 2 years we have progressively seen these markets edge beyond the European average. What we can also see is potentials. These are markets that are either growing extremely fast, like Poland, which has characteristics of a Western European market already, or markets that are huge but still require growth to be unlocked, in particular Italy and Spain, where we see still a lot of ad spend in traditional media locked in. And then we have, of course, the emerging markets, many smaller markets that are high growth but still very small on the left side here. The digital penetration that I showed you earlier, 62.7% total digital ad spend in aggregate, we can also see reflected when we look at the individual markets. Again, you can see UK, Ukraine, Sweden, Norway, Denmark. These are very mature markets. But then also we see some unlikely candidates like the Czech Republic being fairly mature here. And you can see, for instance, if you look at Italy and if you look at Spain, there's still a lot of headroom for growth. From the markets, let's dive into the formats. We have a very diverse market, from banners to videos, search, etc. How did the formats evolve? If we sum up the formats to a market share and compare 2023 and 2024, we can see quite a few changes here, and that signals more fundamental market shifts. Not surprisingly, social expanded its share, driven in particular by video, by new platforms like TikTok, etc. But we can also see display, including video and audio, but excluding social networks, expanded share. That's something that we need to dive into. Spoiler alert, it has a lot to do with video. We can see the search market actually contracting in terms of share. It grew, but it contracted in terms of share. Because what I've done is I've factored out retail from this data, retail search. Classifieds and directories is a shrinking category over time, but then you can see on the right, you can see the expansion of retail media, where I have taken search and display data, removed it from the relevant categories and put it in an individual retail bucket. So you can really see how that is starting to tip the scale. In terms of growth, social grew fastest, but we can see the overall non-social display category, including video and audio, wasn't far behind. So there's a lot of dynamism in the market available outside of social. And of course, here in search, we have retail factored in. Let's dive into display and look at this in more detail. Video overall dominates the display category. You can see it here. So we can see 24.5% growth, but even excluding video, and this is without social, we can see double-digit growth, but adjusting for Turkey, it really goes down to single-digit. If we adjust for inflation, it's probably very similar to the previous year. It's a slowing market. Growth is happening elsewhere. Audio tipped the 1 billion euro barrier for the first time in 2024 and grew at around 18.3%, slower than previously, but still double-digit. Let's focus on video, because that was a key growth driver. Outside of social, video exceeds 50% of the total display market in 9 markets and is over 30%, over 1/3 in nearly all of them, roughly on average at 40%. This growth came from multiple sources, but also some new entrants fundamentally, and we were able to break this out for the first time in this study. So if we look at what drove the non-social video, we can split it out like this. We had quite a few new entrants in the markets, Prime, Disney+, Netflix, etc., from a small base. SVOD really skyrocketed, growing triple-digit. But we can also see that BVOD, broadcaster video on demand, grew strongly by nearly 30%. And this really checks out when we look at the company reports, for instance, of a ProSiebenSat.1 who reported that Joyn grew around 27%. So a lot of the data that we get from the broadcasters actually congregate around this figure. So this really shows there's healthy growth in premium formats outside of walled gardens. AVOD, lots of stuff is in there, YouTube is in there, other services are in there that grew around 17%, and other is primarily both in-stream and out-stream publisher video and video on retailer pages that grew fairly slowly. So you can see there's a lot of difference in the video category, but quite a few new entrants would really drive the growth. On the audio side, I mentioned 1 billion barrier was cracked. We saw a slight slowdown of growth, but also an alignment between podcast and streaming audio growth. I've mentioned that for many years, that podcasts are fantastic ad opportunities, but they still lack the measurement. You typically listen to them once, etc. So after a podcast bonanza, we can now see digital radios and also streaming platforms increasing their share of the overall digital audio market. In digital audio, in contrast to other formats, it's not the usual suspects who are the strongest in terms of market penetration. And we can see this when we look at what share of total display advertising, where we put it in, does digital audio have. It's not the UK, it's not Germany that are top, but it's other markets. It's Belgium, it's Spain, it's Ireland. It's typically markets that have historically very strong radio markets. So what we did is we looked at the last year before the pandemic, before podcasting and audio streaming really took off, and say, what was the share of the radio market, traditional radio, in those markets then? We've indexed that and then mapped, these are the black dots, mapped that over the share of digital audio. You can clearly see on the right side, it kind of scatters off. It's smaller markets which don't have the audio penetration yet. But for the majority of markets, it's a pretty decent correlation here that really demonstrates how audio and radio go hand in hand. And what we see in digital here is an extension of already learned consumer patterns in those markets. Of course, as an IAB, we can't ignore not just the formats, but also the transaction mechanisms. How was digital media in the display space with video and audio, how was it traded? A lot of it was traded programmatically, and again, we saw an acceleration of programmatic growth. which was slowing down to 7.4% last year, the first time we had actually single-digit growth. There was quite a bit of uncertainty in the programmatic market about what was going to happen on the regulatory side, on the infrastructure side. But we're seeing a re-acceleration now in line with the overall market. So nearly 20% growth in programmatic. A lot of that came from video, where we saw around 35% growth, whereas the display category grew single digit, or in some markets even contracted. Yet programmatic, and by the way, programmatic for us is only inventory that can be bought and sold via DSP. Some IABs and some other market researchers put the broader bucket automation as programmatic, which includes walled gardens. These numbers are big, they're frothy, but they're not analytically useful. So we did quite a bit of work to actually normalize this data and look at the pure kind of addressable open web spend, which is reflected in here. But programmatic growth was uneven across markets. We saw strong growth in Poland, for instance, strong growth in Hungary and other Eastern European markets, but slower growth in some of the large Western European markets, and also in the Nordics, where we have a very strong, where we have very strong publisher initiatives, and some are actually trying to move direct now. In terms of deals, we can see that increasingly OMP is being replaced by PMP, but that also varies a lot between markets. In particular, some of the smaller markets with a high share, you can see here, they're more like, in a sense, full automation markets where you don't have lots of add-ons, lots of yield management. It's just, in a sense, grabbing the demand. But the markets which embrace programmatic more strategically, they actually have a higher share of PMP. From display to social. How big was the social market? We can see the social market was again driven by video. It's around 56% of the total social market, growing more than twice as fast as the static display. In some markets, the ratio is even higher, but we have some large markets where actually the ratio is a bit lower, so that skews the overall picture. If we now combine display and social into one market versus search and versus the rest, we can see that video really reigns supreme. Video grew by nearly 30%, and overall, if we put those markets together, it's nearly a video-first market. Video is around 47% of the entire total, likely to exceed 50% next year. From that to search, and I grouped search and retail together here. First, let's look at the European search ad revenue, and we can split it into two. We can see that in total, 12.4%, but if we factor out retail media search, it's only around 10.3%. So retail media is increasingly driving the overall search market. 15 markets grew double-digit in terms of search, but huge differences in the long tail, as you can see. From that to retail media, which now for the first time exceeds 10 billion euros. You may have seen other retail media figures that we publish. Caution. These figures here, it's only ad spend that can be aggregated in the rest of this ad spend study, meaning it doesn't have any offsite data in here, so we must avoid double counting. This is why this number here is lower. But it now includes all markets in Europe, so we have a complete reading of the digital retail media figure, in stores also excluded, and you can see how strong growth was in particular on the search side, 25%. It makes sense. Many retailers are still powering on fully with sponsored products. The slower growth in display is actually no reflection on the lack of opportunity in display, but some retailers actually still sold retail media inventory as publisher inventory, as banners on page without transaction data attached to it. So in a sense, that's why you see this transition here and the slower growth here. Let's sum up. Where did we see growth in Europe in 2024? Here are the key growth drivers: SVOD, social video, BVOD, display video. It's all video before we see retail media. In the previous years, retail media was the strongest growth driver. Now, actually, video eclipses retail media. Audio still strong, but you can see, in particular, on the search side and other video side, we have slower growth. Let's dare another outlook, shall we? And I'm only going to do that excluding Turkey, as it's too volatile. We said the roller coaster is over, but it is already restarting right now. Behind me, you can see data from the Global Economic Policy Uncertainty Index, an index that measures in how far policymakers, economists, and others agree or disagree on the future state of the economy. The higher the index, the higher the levels of disagreement. And you can see particular periods in history where disagreement is at peak levels. .com crash, Lehman crisis, Trump election 1, somehow every crisis sparks a higher level of disagreement. But now with the looming tariffs, which some say could shave around 20 billion of a $1 trillion global advertising market, we are at peak uncertainty. So we're back to short-termism, focused on outcomes, wait and see, etc. When we look at the earnings calls of large advertisers, they're ensuring us that supply chains are intact and that they're not cutting yet, but we don't know how that's going to look like in the next quarter. We can already see some slowdown in the advertising market if we look at Q1 published results. I think Meta in Europe said 12.4% versus over 20% in total growth last year. Given the market share, that's probably a read-through on the overall market dynamics. And we're going to likely see a slowdown of the market in the remainder of the year. So I'm saying around 6.4% growth is likely. That is in constant currency, and that doesn't include Turkey. And with that, thank you very much, and back to you, Joanna.
Stay with us for a minute, Daniel. I don't know how you present so much information so fast. And Daniel stays up all night to make sure that the numbers are the most current that they could be. So this is the IAB Europe's Chief Economist. Do we have any questions from the room? You've just had a barrage of numbers, so there must be some thoughts percolating.
And I appreciate there are many, so the study will be downloadable after this. I know Helen, Lauren, and team are working on this, and we're also happy to share additional information not available in the slides if you want to look at the total markets, dissect them, apply the exchange rates yourselves. That will also be possible.
Wow, that's incredible. And can we put this live on LinkedIn with the hashtag now, or are we waiting for an embargo?
I defer to Helen for that.
Wait, okay. It's just for the VIPs here until we get the go-ahead, although I do have lots of pictures. So we have a question.
Sorry.
No, it's
Servus, Daniel. Hallo, schön dich zu sehen. Question, have you any insights how the CPMs for display have developed in the last 3 to 4 years?
Wow, he could do like 3 years of presentations for that one.
Yeah. No, it's not that easy because it fluctuates a lot with seasonality and also by media owner. So we actually saw a depression of CPMs at the tail end of 2023, but then now a stabilization and a growth in CPMs. One thing I think that is challenging is that, in particular in some performance environments, CPMs or even CPCs are too high for some advertisers. So they're seeing high costs, but they're not necessarily getting the outcomes or the returns that are promised. And I think that's a huge thing we must address as an industry. Everyone talks about outcomes. Outcomes are often priced in, but not necessarily delivered. And if we want to continue to grow, we must fix this.
And then I think we have one more question.
Hi, Daniel.
Do you have the mic? Yes.
Yes, I do. Would it be possible and practical to summarize how you modeled Portugal? As you know, it's been a 10-year crusade, and we finally have data, and we'll proceed from there.
I think I'll grab you for a coffee and explain it to you, so I spare everyone the technicalities.
Sounds good. Well, there will be coffee coming up later. Is it a quick one or? Okay, just a quick final question.
It's awesome, the work you do. Is there any intention to map spend to time spent? In other words, to link this to audience measurements where you can actually see how time that consumers are spending is being monetized effectively across different markets?
It may be time to restart this. When we launched this study, we incorporated some Nielsen and some ComScore data, at least in the appendix of the study, so people could do their own analysis. We have never explicitly done a correlation, but that's certainly something we can do. Many of you will remember the infamous Mary Meeker State of the Internet report that always mapped time spent and ad spend. That was great, but I think it was predominantly for investors because it doesn't necessarily mean that if you spend a lot of time with the medium that you should spend more with this. There's always this assumption that there is some kind of equivalence, which is always why out of home, for instance, was never included there because no one consciously spends time there. But I think overall to see which media channels are over or under invested in terms of time spent, that's really something that could be quite useful. And we've been looking at this, for instance, with our retail media committee, where we've seen how under-monetized the in-store environment is, given how many purchases are still happening in-store, but how little advertising revenue is generated there.
Thank you.
Excellent. Dr. Daniel Knapp, thank you very much.
Thank you.
Fantastic. Now, I'm sure you all want to hear, having seen all those numbers, from the advertisers.